Hi class, today we're going to be looking at Chapter 3. We're going to be calculating Social Security taxes. I'm sharing with you problem 3.1b. And in problem 3.1b, what we're going to learn how to do is to calculate Social Security tax. And we're going to also look at the health insurance tax, which is known as Medicare. OASDI is your Social Security tax, and the rate is going to be 6.2%. The HI, or your Medicare portion, the rate is 1.45%. As you can see here, I've went ahead and converted them to a decimal just because it's easier for me to calculate that way. What we're going to be is We1's Foods, and we are calculating the biweekly taxable wages for the employees. And so something I want to caution you about, if it's biweekly taxable wages, that means it's going to be twice, it's going to be biweekly, which means that it's going to be twice a month. So I'm sorry, it's not twice a month exactly. It is bi-weekly, which means that they're going to be 26 pay periods in a year. You need to know that there are 26 bi-weekly pay periods in a year. So we get that by dividing 52 in half. If this had said semi-monthly, there would have been 24 pay periods. But since it says bi-weekly, we're going to do 26 pay periods in a year. So they're bi-weekly taxable wages for the employees of We1's Foods. And what we need to do is compute the FICA taxes for each employee and the employer's share of FICA taxes. And they want you to round the computations to the nearest cent. So what they've given us is a list of employees and their bi-weekly taxable wages. And so in this particular problem, since they gave you the bi-weekly taxable wages, you don't have to figure them. But in other problems, you might have to figure out what the bi-weekly taxable wages are. And that's why I told you there were 26 periods annually in a year. But these bi-weekly amounts were given. So all you do is you simply multiply the bi-weekly wages of each employee by 6.2% to get the OASDI, which is the Old Age Survivors Disability Insurance. That's what that stands for, but it's better known as Social Security. So 6.2% is taken out of each employee's paychecks. So 1,100 times 6.2% is how I came up with $68.20. You can also see up here in the formula bar how I calculated that. So when you're looking at these on your own, you've got a formula to go by up here. And most of you probably knew that, but I just wanted to throw that in just in case you didn't. So all of the Social Security taxes are simply each one of the biweekly wages multiplied by 6.2%. So each one of these would be multiplied by 6.2%, and that's how you get the OASDI taxes that would be withheld for each employee. The HI tax, or the Medicare portion of the FICA taxes, HI stands for hospitalization insurance, is 1.45%. And both of these rates are based on when the textbook was written, which we get a new textbook every year, but the new laws are not reflected as of 2020. So your textbook's basically saying what happened in 2019 because we don't have all the information for the new laws yet for this year. So to get the HI taxes, we simply multiply the biweekly wages times 1.45%. And I went ahead and broke it down into a decimal for you. So you just multiply this by this and it'll give you that. Now you want to make sure that you are calculating these to the nearest cent. So in my formula here, I noticed I don't have it to the nearest cent. So if you'll hold on just a minute while I move some things out of the way that you can't see, I'll change these to the nearest cent. Now I want you to notice in here that I've got one in red here, and that's because when you carry it out 3 decimal places, you need to round it back to $18.13. So there was a rounding error on Ken Harrison's HI taxes. And so I rounded it up to $18.13. Now, what you need to know about FICA taxes are that the employees pay a share of FICA taxes and the employer also pays a share of FICA taxes. So each employee's paycheck is deducted for FICA taxes, which consist of OASDI and HI. And each employer has to pay OASDI taxes or FICA taxes for OSDI, which is Social Security. And what you're going to do is, this is important, class, you're going to pick up the total biweekly wages and multiply it by 6.2%. You can't just say that it's this amount double because sometimes there's rounding errors. So I want to emphasize to you to pick up the total wages when you're calculating the employer's OSDI. The total wages would be multiplied by 6.2%. In this particular problem, I don't think there was a rounding error because you can see this is the same amount as this. And usually what I like to tell students is that the OASDI and HI are doubled really. The employee pays part and the employer pays part. So sometimes it'll work out that these are the same, but sometimes it won't because of a rounding error. So just make sure you don't get any rounding errors. Use the total taxable wages that are subject to OASDI and multiply it by 6.2%. And that gives you the employer's taxes for OASDI. The employer also has to pay FICA tax. They match the taxes, in other words, that are taken out of your paycheck. Again, you want to pick up the total wages and multiply it by 1.45%, and that will give you $126.58. You need to use the total wages when you're calculating the employer's taxable wages, not each one of these individually, because there could be rounding errors, which would make a difference. You'll notice there was a rounding error for HI. You see there's a difference here between this, and that's because we had to round this one individually. So there could be a couple of cents difference between these as far as rounding errors are concerned. So on this problem, we've learned how to calculate FICA taxes. OASDI is part of FICA, which is your Social Security tax, which is, and this year, 6.2%. And FICA tax is also made up of hospitalization insurance, which is also commonly known as HI or Medicare tax. which the rate is 1.45%. Make sure when you calculate the employees' paychecks, the amounts that are taken out, you do it based on what the employees have earned. When you're calculating the employer's taxes, do it based on the total wages, so you won't get that rounding error. I'm going to move on to the second problem. During 2020, Maddie Connor, president of Maggart Company, was paid a semi-monthly salary this time of $6,500. Compute the amount of FICA taxes that should be withheld from her. Note that Maddie files single on her tax return. If an amount is zero, enter zero. I also want you to note that for the Social Security OASDI, there's what we call a ceiling or a cap on the amount of earnings. If an employee earns $137,700 up to that per year, they are taxed on that amount. If the employee's earnings are above $137,700, they won't be taxed on the part that is above $137,700. So in other words, for Social Security, if you make $137,700 in 1 year, you will be taxed at 6.2%, but anything above that, you won't be taxed at. So this problem is made up of three separate parts. The first one, part A, they want you to calculate what the ninth paycheck would mean for this company when they're paying OASDI or HI taxes. We're going to start with OASDI first. And we're going to record it right here. This is where my OASDI tax is recorded. The ninth paycheck would be determined by taking $6,500, which is the semi-monthly salary, and multiplying it by 9 paychecks. The total earnings to date yearly are $58,500. Notice this does not go over the base. So all of these earnings are subject to the Social Security tax. But since we're only paying this person for one paycheck, we're going to multiply 6,500 times 6.2% to get the OASDI tax. For HI taxes, there is no ceiling for HI tax. So the entire $58,500 is subject to HI tax. But for this particular payday, for her payday, she's only being paid $6,500. So we're going to multiply $6,500 times 0.0145, which is 1.45%. And that will give you $94.25. In the B part of this problem, it's treated as a separate problem. She still is going to get a paycheck of $6,500 paid semi-monthly, but they want to know what would happen on the 22nd paycheck. First of all, we would need to multiply 6,500 times 22 paychecks to get the total earnings, which is $143,000. Notice $143,000 is above the ceiling, so part of these earnings are not taxable. So what you have to do is you have to drop back one pay period, and I've done this here. I've multiplied 6,500 by 21 paychecks to get $136,500. The last time they were paid, their total annual earnings was below the base. But before we can pay them this time, we have to see if all of the $6,500 is taxable, which in this case it's not. So what you have to do is you have to take the ceiling, the base, the cap for OASDI, which is 137,700. You're going to subtract the pay for 21 paychecks. Remember I said we're going to drop back a paycheck? The last time we were paid, they got annual amount of 136,500. So if you'll subtract the 21st pay period from the total pay to annually to the 21st pay period from the OASDI, it will leave you with $1,200 that are subject to the OASDI tax on the 22nd pay period. So this $1,200 is actually subject to the OASDI taxes. So I took the $1,200 and I multiplied it by 6.2% to get my Medicare tax, which is $74.40 for the 22nd pay period. Notice the tax was only on $1,200 because the amount above $137,700 is not taxable. For HI, all of the earnings are subject to HI because there's no ceiling for HI. Earnings that are above $200,000 for HI are going to be taxed at an extra 0.9%. So in this case, the total pay would be $143,000 year to date. They pay HI taxes on all of that. So for this particular pay period, the 26th pay period, the 22nd pay period, only $6,500 are taxable at the HI rate. And you multiply this to get $94.25. So in the third part of this, they want you to figure out what it would be for OASDI and HI taxes, how much would be withheld if it were the 24th paycheck. When you multiply 6,500 by 24 pay periods, you get 156,000. If you dropped it back a pay period, you would still be above the cap at 137,700. So the total earnings are above the ceiling for OASDI. Therefore, there will be no OASDI taxes withheld this pay period because the total amount of 6,500 has gone over the cap or the ceiling of 137,700. So there's no OASDI taxes. However, there are HI taxes that have to be withheld. And because there's no cap or ceiling on HI taxes or the Medicare portion, all 6,500 of the taxable wages this period is multiplied by 1.45%. So they would just withhold HI taxes or the Medicare taxes of $94.25 on this employee's paycheck. And then they give you a what if to go with this. It says if Maddie Connor's year-to-date earnings as of her 24th paycheck are 156,000, which was 24 times 6,500, and her year-end bonus is 100,000. Notice when you add both of those together, it's going to go over 200,000. Any amount of wages earned over 200,000 is taxed at an additional 0.9% of the HI tax. And so I've calculated that here. The 24th paycheck earnings, total earnings to date at 24 pay periods was 156,000 plus the bonus gives you the total earnings. Then you're going to subtract out 200,000 because they have to pay an extra 0.9% on anything above 200,000. So the earnings that are subject to that should say 0.9% there. Sorry. 0.9% is going to be 56,000. That's the earnings. So the earnings multiplied by 0.009, I just went ahead and converted it to a decimal, will give you the HI taxes on earnings above 200,000 for this employee, which would have been $504. So in this problem, they took calculating the OASDI, Social Security taxes, and the HI Medicare taxes a step further by adding the ceiling in here. So part of the rules are that we don't pay OASDI on wages earned over 137,700. They don't have to pay tax on that. And that's both the employer and the employee. Neither have to pay tax on that amount that's earned above. Now it has to be above 137,700. And every year these ceilings change. They adjust them for inflation. And so every year you have to learn a new ceiling. So watch out for that if you're in the real world. And again, this is based on what was published at the time that this book was published. And these are subject to change. So you might want to refer to, I believe it's Circular E, to find out the total amount of the ceiling for these OASDI taxes. So the rule is that there's a ceiling for OASDI taxes. And for HI taxes, there is no ceiling. But for HI taxes, anything above 200,000 is taxed at an extra amount. So I don't make the rules up. That's our government. They do these things to us. And so you got to learn the rules to be able to know what to do properly when you're employed. The next problem we're going to look at is problem 3B. Eric Sherm began working as a part-time waiter on April the 1st of 2000 whatever at Yardville Restaurant. The cash tips were $475 that he received during April and were reported on Form 4070, which he submitted to his employer on May the 1st. During May, he was paid wages of $630 by the restaurant. They want you to compute the OASDI and HI taxes, round to the nearest cent. So in A, there's two parts to this, A and B. In A, they want you to figure out the amount of the FICA taxes that the employer should withhold from Sherm's wages during May. And FICA taxes are your OASDI and the HI. That's the Federal Insurance Contributions Act, where all these taxes came about. OASDI is Social Security, and HI is Medicare. So what you're going to do is you're going to take the cash tips that he earned, which he submitted to his employer on May 1st. So this is during May. And then he was also paid $630. So the total amount he was paid was $1,105. And those are the amount of wages that are subject to the OASDI. So 1105 times 6.2% is how we get $68.51. To find the HI tax, 1105 times 1.45, which is $16.02, and this was rounded. Actually carried out 3 places and rounded back to 2 according to our rounding rules. In B, they want you to know how much the employer is going to pay. Now, this A was about the employee, what the employee had to pay. The employer has to match the amount. So again, the total wages are still 1105, and we're going to multiply 1105 times 0.062, and that's going to give you $68.51. And we do the same thing for HI, except we use the HI tax rate. The total earnings 1105 times 0.0145 gives you 16.02 rounded, $16.02. So the employee and the employer contributes to the FICA taxes. In problem 4B, Moisa Evans, a maitre d' at Red Rock Club on September 6, 2000, whatever, his gross pay was $900. 3 days working, 1 paid vacation day, and 1 paid sick day. He also reported to his employer tips of $860 for the previous month, applicable to be taxes to be deducted out of his pay. Evan belongs to the company's 401k plan and has 5% of his gross pay, 5% of $900 deducted each week as a salary reduction. Red Rock Club also provides a matching contribution of $45 into the plan for Evans. Well, they threw this last line in here as additional information that you don't have to worry about. You don't pay Social Security taxes on 401k plans. You pay Social Security on the income tax. You pay income taxes on 401k plan. It could be that, but it depends on if it's deducted before taxes or not, as to whether you pay income tax on that. But in this chapter, we're not dealing with the income tax. We'll deal with that in another chapter. So don't worry about this part right here. That was just additional information. This problem is done very similar to the way we did the other problem, the one that we just did. And they want you to figure out what the deduction for Social Security tax would be. The gross pay that was subject to Social Security tax would be $900. That was the part that of his earnings, his days working, paid vacation, and sick day, plus his tips. The total pay that's subject to OASDI is $1,760. We're going to multiply that by 6.2%, and that will give you $109.12. That's what we would deduct from his paycheck. His deduction for the HI tax is to find the total pay again, which is the same as above. $1,760 is the total pay. Multiply it by the HI tax rate, and that will give you the HI portions of taxes that are withheld on his paycheck. And that's all you have to do on that one. On this next one, problem 5B, there's a lot of variables in this problem. And so what I decided to do is break it down for you as simply as I possibly could. You got to remember some of the things that we talked about earlier in this video about how you pay OASDI taxes. First of all, the annual salaries paid to each of the officers are as follows. They gave the annual salaries, and they said that they wanted you to find the semi-monthly salary for those employees. So the officers are going to be paid semi-monthly on the 15th day and the last day of the month. They want you to compute the FICA taxes to be withheld from each officer's pay me move this out of the way so I can see what I'm reading, on November the 15th. So what you've got to do is for each one of these employees, you've got to convert their annual salary to a semi-monthly salary. And then you've got to multiply the semi-monthly salary to the salary earned to November the 15th. So you got to know how many pay periods are up to November the 15th. And the number of pay periods are going to be 21 in this case. And then what you have to do is you have to determine if there's a ceiling on the OASDI taxes. Remember, the ceiling was if they go over 137,700, you no longer tax for OASDI Social Security taxes. So I made up a chart here. I've calculated the semi-monthly salary for this person. His annual salary was $160,800. If you divide 168,800 by 24 pay periods, it will tell you what the semi-monthly salary is. Then you will multiply the 6,700 by 21 pay periods to get the salary earned to November the 15th. And then you have to look at this to see if the salary is over the ceiling. Is this salary over 137,700? It is. So the answer to that is yes. So in this case, what we got to do is we got to drop back one pay period. If the salary is over the ceiling, drop back one pay period to find the salary earned for 20 pay periods. So 6,700 times 20 pay periods gives you 134,000. That's below the ceiling. The ceiling is 137,700. So what you have to do is find the amount of taxable earnings that this employee has for the 21st pay period. And to do that, we subtract the salary for 20 pay periods from the ceiling, which is 137,700. So 137,700, our ceiling, we're going to subtract out the amount of the wages earned at 20 pay periods, which was 134,000, and that's going to leave us with 37,000 that is taxable toward OASDI. This is the rate. We multiply 3,700 times 6.2. The amount of the OASDI taxes, sorry about that, is $229.40. So that's 3,700 times 0.062. So for Paul Perez, the president, he went over the ceiling. We had to find out how much over he went. He went over 30, he went over the opposite of that, 6,700 minus 3,700, whatever that amount is. He went over by that amount. So what you've got to do is you've got to figure up what the salary is at 20 pay periods, because we're dropping back a pay period. We're going to subtract this from the ceiling amount, and that gives us our taxable wages. And then multiply, and that gives you the Social Security tax. For the next person, Donna Donald, she gets an annual salary of $141,600. To find her semi-monthly salary, we divide $141,600 by 24 pay periods, because there's 24 pay periods in an annual salary if they are paid semi-monthly. The salary earned to November the 15th is 5,900 times 21 pay periods. It's 123,900. Is this salary over the ceiling? The answer to that is no. And so the entire 5,900 is going to be subject to the earnings for OASDI, the Social Security portion. So 5,900 times 6.2% will give you $365.80. And that amount is the taxes for OASDI. So for the rest of these, you can see that the annual salary is less than 137,700, the ceiling. So none of the rest of these we had to worry about them going over the ceiling. They didn't. So they're all subject to the tax of 6.2%. So we simply multiply the semi-monthly salary times 6.2%, and that will give you the amount of OASDI taxes that would be withheld from that employee's paycheck. And that's just for the Social Security taxes. I did all of my Social Security taxes first. And since the remaining are less than, the annual salary is less than the ceiling for OASDI, all of the earnings are subject to taxes. So you just multiply the earnings by 6.2% to get the rest of these. Note, when you calculate HI or the Medicare portion of FICA taxes, there is no ceiling as we calculated with OASDI. All the earnings are subject to 1.45%, but there's an extra tax that would be calculated per year on 200,000 above, and the extra tax is 0.9%. So what you had to do is find the semi-monthly taxable amount, which was taking this and dividing it by 24, and then you multiply it by 1.45%. Because none of these employees went over 200,000, you simply multiply by the tax rate to get the HI taxes. There's a second portion to this problem, which you have to go through all the steps again. And so the second portion of the problem states that you're going to determine the amount of taxes that would be withheld on December 31st. So that's annual. We still find the semi-monthly salary amount, but the first person, Paul Perez, went over the ceiling. And so we had to drop back to 23 pay periods, because at December 31st, that would have been the 24th pay period. We dropped back one to 23 pay periods and calculate 6,700 times 23 periods. That will give you this amount here. Notice this amount is still above the 137,700. So what I'm trying to say to you is there would be no taxes, zero taxes that would be withheld. But I've given you this little what if here. And what you would do is subtract the salary for 23 periods from the ceiling of $137,700. The remaining amount is taxable portion of semi-monthly earnings if it is a positive amount. So if you took this and you subtracted 137,700 from this amount, or actually you put in 137,700 to start with, you take the ceiling and subtract from it the earnings, it would have come up a negative amount. And we don't pay taxes on this negative amount here. So in other words, 154,000 at 23 pay periods was above the 137,700. So there's no OASDA taxes that would be withheld. On the second employee, you can see that the salary earned at December 31st is 141,600. That is above the ceiling of 137,700. So we have to find out what her salary would be at 23 pay periods. So we would multiply 5,900 times 23 to get 135,700. 135,700 is below 137,700. In other words, we put in the ceiling, subtract out the amount of pay at 23 periods, and we got a positive amount that time. And that means we owe taxes on $2,000. So 2,000 times 6.2% is $124 that we take out for OASDI. The rest of the employees didn't earn enough to have to worry about the ceiling. So you simply take the amount of their paycheck and multiply it by 6.2%, and that will give you the taxes that are withheld for OASDI. And when we're calculating HI, you have to take into consideration if there's anything above 200,000, which in this problem there was not. So the HI taxes are just the semi-monthly salary times the HI tax rate. That's how you calculate the HI taxes on this. So I hope this has helped you a little bit with learning about the OASDI ceiling or cap. Just be careful of that when you're calculating your problems. I'm going to move on to the last problem. And in the last problem, Amanda Autry and Carly Wilson are partners in A&W's gift shop, which employs individuals listed below. Paychecks are distributed each Friday to all employees based on the information given. Compute the amounts listed below for the weekly payroll period. And so what they did is they gave you this and they told you what the salary would be. And in each case of these employees here, sorry about that, I know I'm flipping around here. I need to move something out of the way that you can't see, but I can see. It's in my way, so I'm gonna move it up here somewhere out of the way. All right, so what they gave you in this problem is the name of all the employees and their salary. Notice some of them are paid by week, some of them are paid by month. Some of them are paid by week, but what you really have to pay attention to in this problem is the titles of the employees. If the employee is a partner, they are not considered to be an employee for purposes of calculating Social Security taxes or Medicare taxes. So one of the first things you have to distinguish between, and they gave you a hint, they said that it's important to ascertain whether a person's wages are considered wages or drawings. If it's an owner and they're taking drawings, you don't tax them for Social Security and Medicare on a weekly basis. What will happen is you have to understand what the law says. And the law says that an individual cannot be both a partner and an employee for purposes of wage withholding, for payroll taxes, or FUTA. The fixed periodic compensation of a partner, which is often referred to as a guaranteed payment or the partner's drawing, is therefore considered to be self-employment income. So these partners, you're not going to take out any OASDI taxes or HI taxes on these partners. They are not considered to be wages for a partner. It's drawing. So even though they are employees of the company, if they're taking a draw, which could be in the form of a salary, they do not get these OASDI taxes taken out of their draw. At the end of the year, they will have to pay self-employment tax on the amount of the drawing. And that Social Security tax and Medicare tax, the FICA taxes, will be paid by the partner, but the partner has to pay it with a different form. The partners have to pay both the employer's share and the employee's share. So it's like they're doubly taxed for this. If you read through this, you can see where I've mentioned that to you. So to try to simplify things, let's take Kelly Simmons, who is an office employee. She's not an owner of the business. She's not a partner. So her earnings are subject to OASDI. Her salary is $750 per week. So all of the $750 are taxable earnings toward Social Security. So we would multiply 750 times 6.2% to get $46.50. We would multiply 750 for HI taxable earnings times 1.45% to get the HI tax. For Jim Tress, he's in sales, but he's paid per month. So what you have to find is their weekly pay. To do that, you're going to take the $34.50 and you're going to divide that by, you're going to take $34.50 and multiply it by 12 months in a year because he is paid per month. You're going to annualize the wages first. Then you divide it by 52 weeks to get the weekly amount. Then what you're going to do is, this is the earnings that are taxable. You're going to multiply it by 6.2%, and that will give you the OASDI taxes. These taxes are also subject to HI, taxable earnings are subject to HI at 1.45%. For the delivery person, he gets paid per week. So 520 is how much he gets paid per week times 6.2% will give you the OASDI tax, and 520 times 1.45% will give you the HI portion of the taxes. Again, the partners, you do not take out any OASDI or HI taxes. Partners have to pay self-employment income, and it's something that's done separately. They're going to pay these taxes quarterly at the end of the year. So for the remaining portion of this, they wanted you to calculate the employer's OASDI taxes. Remember how we added the earnings together to get 2,066.15? We would multiply that by 6.2%, and that would give you $128.10. The total earnings times 1.45% would give you the amount that the employer has to pay. Remember, the employer has to match the employee's amount for FICA and taxes. And that's all I want to talk to you about today. We'll see you next time. Bye-bye.